Hello, traders. This is the Market Dancer Report, December 17th, 2015. We talk about risk reward. You might have heard the term where I say risk reward is static. It can be misleading. Uh, how does it mislead you? It will force you sometimes to stick with a plan that has no chance of succeeding. Or if you are succeeding, you don't become flexible. Let's say you go long a stock or a futures contract and you're looking for a 4-to-1 risk reward, or reward to risk is the more proper way to say it. And a 4-to-1 would give you an 80-point target. I've seen them up 40, 50 points, but they stubbornly refuse to move because they want to get that 4-to-1 return or 3-to-1 return. So what happens? The market eventually goes the other way and you wind up losing your 20 points. You have to be flexible. Anyway, another thing we talk about is the avoidance of counter trend trading. But of course, everybody loves to do it. And we do it. We do call it for more advanced traders, especially those who've completed training, like our professional traders course. So how do you set it up? All right, here's an example. You'll note it that in the morning, in this case 8:59 a.m. Eastern Time, half an hour before the markets open, we come up with the status report. I like to have it actually a little later because you don't want to trade too soon. For today, because we have the Fed report, what we did was post the opening numbers. And this is what we do. We just go yesterday's close, high, low, daily pivot, support, and resistance. You'll notice we are projecting the support and resistance determined by a number of factors. So how do you go and prepare for a reversal trade if we say don't trade pre-open? Well, we're giving you enough time to put these charts into action, and I'll show you how. Okay, well, here's your chart. It's about 9 o'clock, about the time when you should be at least analyzing your charts. Give yourself a little time. Now, we said we projected support at 17,515, so you would put a bar, horizontal line or a bar at 17,515. Also, do this in advance. It doesn't really pay to do it when the market's going crazy. Well, we're running out of chart room here, so you have to edit. This is how you edit your horizontal line. Remember, we're looking to put one at resistance 17,615. So you can type it in if you don't have space for it. This way you don't have to guess. You have. Now what's going to happen is it's going to disappear because we're not as high. We're at 570, so you're about 45 points away from what we're projecting as the high. So let's see what happened. The market opens up in a little while, right? So a half an hour later, here we are, we're open, and we're at 570. Remember, it is Fed day, so you want to trade lighter. And we watch the market start it up, and it's moving higher, already at 17,600. We did take some light breakout trades as soon as the market broke through this little tiny resistance point here. See that little, the trend was up, the yellow line is above the blue. So we took that. Now it's good to have a target, in this case 615, so you don't get too excited about being long on the trade and you have a place where you expect the market to run into resistance. And that's a good thing to use it for too. So if you notice, here's where we're taking profits. The high, 17,614, one tick away from what we projected. So, will the market pause and go through there? It was a great place to exit our long trade, but now is it a short? Well, certainly the market's trying to go through there. But if you notice, and we were reading the tape at that time, the market was having difficulty making a new high. And as soon as we saw tape selling coming in, we called a short. What was nice is we had a predetermined stop price right above that 615. And in this case, around 608, we were able to get a short trade. And you always go for a quick first target and pull your stop down. Once you're locked into a trade, you don't have to worry about where the market's going to go. If you notice, the market tries to take it out. Right here, the high is 611. We were short at 609 and 608. And the market just hesitated a bit. Got our first target. Pull your stop down a little bit. If you notice, the market establishes another swing point. So then you can move your stop from right above that 615, lock it in. You're locking in about 12 ticks from there after you've taken one off. Now, if you notice, the retracement long did not work because it didn't make a new high. And now it's completely rolling over. And a number of you guys caught a beautiful sell signal all the way into the 10 o'clock time period. Guess where your target's going to be? Ooh, 515. Remember our support level that we talked about there? So if we're short from 615, wouldn't you want to get out at support? There's our support right there. Isn't it amazing? We did this a half an hour before the market opens. Isn't it great knowing your support in advance? That's what our clients did, so they feel more comfortable taking the trade. Now you could have grabbed, which we did, we actually reversed again and took a light long trade off of that 15. It was good for about 20 points, got stopped out on the trailer and initiated a new short. Look at that. Okay, knowing this stuff, putting your targets out, drawing it on the chart is critical. Use our status box. Come in a little bit early and then go put these lines on. We give you time to put them on. Your trading will be a lot better than it has been. Thanks. We'll see you later.